So the question is why to do the valuation separately for land and building, separately for plant and machinery, and separately for the company as a whole. Uh, uh, so the answer is, remember, ultimately we do the valuation of an asset or of a liability. Now, that asset or that liability can differ from situation to situation. Now, say for example, someone is interested only in disposing the land. So, if someone is interested only in disposing the land, then obviously he will need to do the valuation only of the land. And if there is a building also on that land, and assuming this is independent, it is not part of a company, then the valuation will need to be done only of the land and the building together. Likewise, if someone is disposing a plant and machinery or purchasing a plant and machinery only, so obviously the company as such is not, the entire company is not to be valued. What you are purchasing or selling is only a plant and machinery item. So therefore you will need to do the valuation of only plant and machinery item. Now, sometimes you may be interested in selling the company itself. So when you are interested in selling the company itself, then the question will come, when you are selling the company itself, then do you also need to do the valuation of land and building and the plant and machinery of that company? Now that is where we have to understand. So remember, a company can be sold or bought under two premises. And what are those two premises? As we all know, the first premise is on liquidation basis, and the second premise is on the going as a going concern. Assuming that the company is to be valued as a going concern. So if the company has to be valued as a going concern, so obviously you need going concern. So you need to have the future cash flows of that company. So future cash flows of the company, which are getting generated as a result of the tangible and the intangible assets the company is having. So the future cash flows that you are computing are the effect of use of the tangible and intangible assets, and that is where you will use the SFA and do the valuation of the company, and that is where you do not have to worry about separate valuation of land and building and plant and machinery, because you are interested in buying and selling the company only. But in case if a company is being sold or bought not as a going concern, but as a on the liquidation premise, now in such case the valuation will need to be done separately only of the plant and machinery and of the building, because this company is not a going concern, this company is going to close. So to find out the fair value, you cannot use the going concern because it's not a going concern. You cannot use the discounted cash flow method. So only what you can use is the value of the land and building and the value of the plant and machinery. And this is the reason why you have to have valuation of different assets depending on different situations that you are in.